Welcome to Markets Now. A mixed day of trading in the livestock futures on Monday. Grains ended to the plus side. Mike Zuzolo, Global Commodity Analytics, is joining us with analysis. And Mike, grains, obviously the rally tied to the Russian news. They're going to pull out of the grain export deal. But were you a little disappointed with the close?
I was until the very last half hour, Michelle. I think that's where, from my standpoint, when you look at the hard red wheat, it was just a week or so ago we were trading upwards of 10.30. We've lost $1.25 almost from high to low in the hard red wheat just this month as we close out the month of October today. And so I think that it's fair to say we don't have any weather or we don't have any war premium in this market. And if we do,
Right.
it's very little. And maybe that's because of export demand, but I would also counter that with the idea that the funds are net short. Managed money positions are net short, the biggest level since July 5th of 2020. And so I think they're out of position given the fact that Russia is, I believe, getting ready to hit their kind of maximum pressure campaign as we go into winter and essentially use the same policy they've had with energy and start to use it with the food. And that's why they're doing this suspension of this trade deal or this grain deal that they brokered with the Turks and with the United Nations.
Well, and I asked you if you were disappointed because there was a lot of the trade that thought we would not only gap higher but be, limit up on the close on Monday, and we weren't. And so do you think we'll see a lot more follow through buying action, and how much war premium do you think we need to put in?
Yeah, I think we will, but I think one thing that stands in our way between now and Wednesday is the Federal Reserve. And I noticed that dollar and those outside markets, the crude oil market, really working against the grains and working against the bull in the grains and in the agriculture as a whole. So I would probably rather answer that question after Wednesday to see what the Federal Reserve does and what the reaction by the dollar was. But some of the emerging market currencies were moving very nicely in our favor as far as agriculture exports, with Brazil's presidential runoff being a victory for Lula. The Brazilian currency was making new highs against the US dollar as we came on the air.
So the other headwind really for both the wheat and corn markets on Monday continues to be export demand. Export inspections were pretty dismal, and I think traders still, thinking about the fact that last spring when we had the big rally, we just choked off demand.
Yeah, it's all been about the domestic market here in the corn. I mean, I've got clients in Nebraska that are getting $1.50 over with rail going into Garden City into the feedlots. And then I've got clients down in Owensboro that are 85.90 under right now. And if they wanted to put any kind of corn or beans in commercial storage on the Ohio River, it could be upwards of 80 cents on beans and 50 cents on corn. And so we've done a good job in the market of keeping the corn here, but that has been at a huge expense of a big drop in year-to-date exports for the corn, and we just need the river levels to come up, which that does look like it could be on the horizon as we get into the end of this week and into next week. It looks like there's a couple weather systems coming in that could maybe bring us back up in river levels and get those drafts back up to the maximum number.
So again, a disappointing close. You couldn't close above $7 there today in those corn contracts.
Yeah, I would put corn as a follower until further notice, so to speak. And I think that's where it goes back to until we get an idea of Brazil's crop and until we get those river levels back up. I think the corn is going to continue to follow the wheat. And I would say, generally speaking, Michelle, I think this market could develop kind of similarly as last fall and early spring, as we see the European and the French markets, the Paris markets really drive us, and maybe the energies do as well. And that's really where corn gets most of its movement from.
So I asked you how much war premium we needed to put in the wheat. What is your target, upside target on wheat?
Yeah, for July hard red wheat futures, my overvalue level is around $11 because I really do feel like that we need to encourage the plantings in the northern hemisphere, and that's pretty much past. But now we've got to get over to the southern hemisphere and encourage that as well, and essentially ration the demand at the exact same time. Because I do think there is good demand out there. When you look at the USDA numbers as far as what's been shipped and what's exported, maybe we're not getting the business, but Russia and the Black Sea and Romania, they've been very, very busy. Europe has been very, very busy as well. So the demand is there. It's just we're not getting it, in my opinion.
Yeah. Soybeans did end to the plus side. We closed all the contracts above 14. Meal and oil were higher. Do you think that the export inspections were part of what helped keep us up here today? Or I know we got some spillover from the wheat, but
Yeah, I think you're right. I think the export inspections helped a lot because I think the beans started off as the short side of spreads or unwinding of the long side of spreads. And they had to do that because I think the market had gone into the weekend being long beans and short grains. And so we needed to do that. And then we saw the vegetable oil market try to find some support at the expense of the meal. And I think that also hit the beans early on. But I think we did gravitate back towards the very strong performance in the exports as well as that strengthening Brazilian currency. And there is talk that some of the Bolsonaro people that are unhappy, that are in the trucking business, are looking at maybe a trucker strike that could shut down most of agriculture because, from what I'm hearing, it could be 12 states wide at this point. That's something to really watch here, I think, as we go into the middle of the week.
All right, something we'll keep our eye on. Cattle market setting back here today. Obviously, higher corn pressed the market, but we kind of were in consolidation mode before that. Do you think we have signs of a top or not?
Yeah, I think we did with the October expiration. I didn't get a settlement out of the 79 contracts that were traded in October, but we were down 360 points in October, and we went right back to the September high of that 146.78 level. That to me could be an indication of a topping pattern technically and from a standpoint of the fund. So we really need some strong cash market. I would also say, Michelle, we're not really in a beef seasonal right now. We're coming into the turkey bird seasonal. I think it could be a very good ham seasonal because the avian flu and the lack of supplies of poultry in the meat cases. But I think really when it comes to the beef side of the equation, cash market's probably going to struggle at this point for the next 10, 15 days after the really nice, what they showed us last week and the really nice move up.
So you mentioned seasonals and the cutout values. Let's segue into hogs. Do you think that the cash market is starting to erode, or are we getting into that time period where demand's going to kind of pick up again here?
Yeah, I think the demand's going to pick up, but I do think your point's really well taken. And we did not see a good retail market on the USDA update on Friday. The seasonal activity index was much lower than I wanted it to be. I think, though, that what I am seeing in these featuring ads, like our local Walmart is putting up boneless pork, um, uh, boneless pork loins at the same price per pound as they are a butterball turkey right now. So I think you've got a situation where you probably do have a tight supply of the poultry, and you're trying to come in and use spiral cut hams and use some of these boneless loins. The other thing I'd throw out is the CME cash index on the hogs is upwards of 93 bucks, and these futures is down at around 85. So you've got a pretty nice premium that the futures could go after if those loin prices could hold up here.
Okay, we'll watch that. Thanks so much, Mike Zuzolo, Global Commodity Analytics with today's Markets Now.